Good afternoon, and welcome to the Boring Millionaire podcast. Today is Monday, October 20th, and I want to discuss what we've seen in the stock market over the past month and where I believe the stock market will be headed in the near-term future. So the past month has been positive, but only so positive. We're up between 0.5% and a full percent on all the major indexes, and if you're curious what an index is, one great example is the S&P 500. The S&P 500 is the most accurate reading of the stock market's health as a whole, and it is used as a benchmark to measure how the stock market is performing. So with that said, over the past month, we're basically even, but on Friday, October 10th, we saw a 3% decline in markets across the board. Now, for me, that was awfully telling because over the past 6 months, we've had one of the most incredible market rallies that I've ever seen in my career. Since the April lows, we are up 34% at the all-time high, and in my opinion, I think it's about time that we start to see it relax and cool down a little bit. Now, within that rally, there were very important key metrics to keep in mind. The April lows were a result of all that tariff news, so we were rallying out of a market decline, so it makes sense for it to be somewhat as strong as it was. And then we also broke through the previous all-time high of 6150 on the S&P 500 at the end of June. So not only have we rallied 34% over the past 6 months, since the end of June, we have also rallied 10% further into record territory, which was all valuations that we have not yet seen in the stock market as a whole. So with that said, we are certainly high in our premium, and I do think the gears are starting to shift back, and we're going to start to see the market slow down. So like I was referencing, on October 10th, we did see that 3% decline. The market rebalanced on its 3-month average in the week following, and it did not go below that 3-month average. However, it's basically been trading along it that entire week. And now, again, today on Monday the 20th, we did see a pretty significant rally in today's trading. We were up just over 1% at one point, but we did not break the all-time high that we see on the S&P 500, as well as in other indexes, but we'll focus on the S&P 500. So what that is telling me is we saw a massive decline, and in the opportunity for people to see it as a buying opportunity, some people did, but the volume was not crazy. So some people saw that as a buying opportunity, but not too many people. So the fact that we didn't break the all-time high today is telling me there's more decline to come, and I truthfully believe that in the coming weeks we will see a correction across the markets. Now, a correction is a 10% decline from its all-time highs, and in the name itself, they call it a correction. It's not called a disaster or a catastrophe. It's called a correction because these things are supposed to happen. And roughly about, I would say, once a year, you would see a 10% decline from its all-time highs. And granted, so we did see one earlier in 2025 when we first fell in March and then fell deeper in April. Granted, with those tariff news, we have seen a 10% decline, but with the rally we've seen from the April lows and also from the end of June into record territory, I wouldn't be surprised to see a correction in the market. Now, I don't necessarily think we might go all the way down 10%. We could go around 5% and stop around 6,300 on the S&P 500. And the reason I'm picking 6,300 is that's where a lot of the chart analytics are telling me we would land next. So if we see a massive decline, I do think we'll land at 6,300. And then if we bleed a little further through that, I could see us landing between 6,075 and 6,150. Now, 6,150, a reminder, it was the previous all-time high that we saw in the S&P 500. So trading analytics would tell me that's an important spot for it to land, and that would be 10% roughly from our current all-time high. So with all that said, I am a bear currently, which means I am betting that the market will go lower, but it is always important in your investment career to plan for both angles. So if we see in tomorrow's trading that the all-time high gets broken through and all major indexes are rallying at fresh all-time highs, it would be hard for me to sit here and say, I still think that the market's going to decline, but all of the signals that are in the market are pointing to a near-term correction, and that is where I have my money focused on. And I do have slightly less in my trading fund right now, and I do have cash allocated to the side to take advantage of a down market. I want to remind everybody that if we do see a decline in the stock market, that's not a bad thing. It is, in fact, a very good thing. As the age-old saying goes, buy low and sell high. So if you see prices fall, that's your opportunity to buy them low. The general idea of the stock market is you want to invest your money and see that money appreciate and grow upwards in value. So if you're buying something at a discounted price, you're already appreciating when it returns to its regular valuation, and then you will appreciate even further as it goes further into new territory. So with all things considered, I, again, am a believer that the market will see a decline in the near-term future, and I would be an investor in that decline, and I am going to be a buyer of many stocks if we do see that across-the-board decline. So one important piece of information to keep in mind with all this, while the market is sitting just under fresh all-time highs, the volatility index is still 20% higher than it was at the start of the month. So the market looks like it's doing fine, but in the background, volatility is high, which means fear is high, animosity is high. Volatility means people are concerned and timid about the market. They don't want to buy yet. They're afraid something's going to happen. So given that high price and volatility, while the market is still trending less than 1% from its all-time highs, that is a huge signal for me to believe that this market decline is in the near term. Also keep in mind, on Wednesday, October 28th, we will have a Federal Reserve meeting, and with that, they could cut rates again. Now, generally speaking, cutting rates would be a positive for the market as a whole, but that doesn't necessarily mean the market will be going higher. Some investors might consider that those prices are already priced in, that news is already priced in, and again, volatility is high and people aren't optimistic about earnings. They might not want to invest until they see some discounts in these share prices. So with all that said, feel free to reach out to me with any questions you might have about the stock market or investing in general. You can find me on Facebook, Instagram, and Threads, and you could find all other episodes of this podcast on YouTube, Spotify, and Apple Podcasts. My mission is to make sure you feel confident about your money, and that way you can begin investing in a better financial future for yourself. So thank you for tuning in, and I'll see you next week.